right. Good evening, everybody. How's everybody doing? Let's do a beautiful visual and audio check. See and everything go okay? Looks good. Looks good. Nice. Good. Well, I'm glad that the new intro is working. Great. Good music. What another crazy day. Looks like the audio and visuals looking great. So let's just jump into it. Welcome to Slow Markets, everybody. I'm Coach Dakota, Coach DBA. As always, there's the top step risk disclosure in the YouTube chat. This is not a signals class. It's for educational purposes only. And once again, here's the schedule for the evening. I'm going to be saying this a few more times to make sure everybody knows and understands, where we're going to be going through a rapid fire NASDAQ, crude oil, Nikkei, and then we'll transition to the gold trade at 8 p.m. Central. And after the gold trade, we'll do a brief Q&A, and we'll start talking about statistics. We have a lot of users here in the chat, and it's new this week, and I'm excited for it. So right there, I'm going to pin it to the top of the chat. If you would like me to review your statistics near the end of slow markets, go ahead and submit them there. We all know on TopstepX, you can go into your statistics. You can see on my screen, click on performance stats, and then click on share, and then copy that link and post them. It's been going good. I've enjoyed it. Sounds like you guys have been enjoying it as well. That being said, what a wild ride in the NASDAQ today. I took some losses in my live account, but I've been doing really well in my express funded accounts. It's been something else. Let's take a look at the way the market's been. It's been very, very volatile in terms of the way the market is reacting. I mean, even the consolidations are volatile. Looking for little breakouts, and our regular technical analysis is just I don't know a better way to explain it other than decreasing size and see money make money, or see money take money. Looking for I don't know. I think just very volatile is the best way for me to explain it. So here is the NASDAQ on the daily, and we are still kind of, dare I say, I don't know. I was considering to say this is consolidation because we're just inside the Monday's craziness. So I dare say this is consolidation, but yet it's just a very, very volatile consolidation. I was thinking that maybe was going to stay within the yesterday's, but at the end of the power hour, you guys seen it, we broke down, we sold off, and even during this the past hour or two, we sold off even a little bit further, but we are starting to get back into this range. But essentially what I'm going to be looking for is the market to kind of stay in this area for quite some time, and I know it's a big area. I mean, essentially it's over 1,000 points. 1,000 points in one day. I think this is going to be something interesting going into the end of the week, and then going into next week is, do we stay consolidating within this range? Here is the low from the Monday, ugly sell-off, and then of course the high is around 18,400s. And so, I mean, you could dare say that the Sunday, like the Friday close, we gapped down, we went up, we filled that gap from Sunday, and we're selling right back down. Maybe we go back down to the bottom of this. I don't know. It's going to be interesting to see. We do have this is a key level, of course, where we have a lot of resistance and support, and it's shown itself again right around that 18,000 level. We did break below it, so I would say the odds are favoring the bears to continue some momentum, but this has just been a wild ride in the markets. And as we start to zoom in, let's go ahead and zoom in. I mean, you kind of can see it here, right? If we're looking at this move, I was not looking for it to sell off this much. I was looking for maybe just a test back into the support, and you guys kind of seen it in the power hour. I was looking for some type of a bounce back up to these highs where it was buy low, sell high, looking for the market to consolidate up here. However, we did not. We broke through this support zone, and we are right back at this next one. This next one, as you guys could see, is from Monday and Tuesday, where this was a nice support and resistance zone. We showed some resistance, we showed some support. We're back there, we're consolidating. So, I wouldn't be surprised if we see some type of a support or some type of a bounce, a little bit of a pullback or a rally. Maybe we see something like this tonight, where we rally back up into this, and then we can either choose to go back down, or maybe we just break back up into this and consolidate and continue the consolidation. I'm not sure, but we are finding some buyers in this zone. We're consolidating a little bit. If I had to just take a guess, take a stab at it, I think we might just break down. I mean, we broke through this support zone. We're at this next one. I don't see a reason for this market to move, past these major support and resistance. But yeah, very much it's realistic to come back down and see if we could test these mid 17,000, 17,400 all the way down up to 17,500. And that's if we, break. But preferably, I would love to see a pullback and then a continuation. So definitely looking for a pullback and then a continuation. We continue to zoom into a 5-minute chart, and you guys could see this was today, right? This was today during the New York session. We had a ugly double top. Ugly double top. We broke it, and as soon as we broke, this is a very simple pattern where we come back. We tested it twice, and both times it became resistance, and then it was just completely a sell-off until we got back down to this support zone. We tried to break through. This was during power hour. I was looking for it to break through. I was done trading at the day, so I just switched to a demo account, and we tried. It wasn't for a lack of a good effort, but we did try. But at the end, we failed, and we are broken down through that resistance. Yeah, it sucks. It's unfortunate for people who are looking to buy this. I was one of them. I didn't do too well. And so here we are again. We are right at this 900 level. Now that we're zooming in, we can kind of see this was support right around this 17,900 to 17,000. Well, this is a big support resistance zone. And here we are. We're right there. So the question is, we did break through, right before we started the slow markets. We've rallied right back into this zone. So the question now is, do we have that continuation back down, or do we consolidate and maybe we bounce back up to these 18,000 and where we started to see this support in here? I'm not sure. I mean, at this point, it's very difficult. I think even David Green was saying, this has been a very, very difficult market to trade, just because of all the volatility. Even though, from the technicals, still not too bad of a market, right? Like maybe you were playing this, as we were looking for this to become a channel. If you're a channel trader, then there was something if we broke down where that could have been a good trade, this breakdown, and then this test up, and then a continuation. Like I could sit here and I could continue to go through these technical patterns over and over. But I'm seeing that the chances, I would really like for us to come back and see the lows on Monday. And then if we do find some buyers back, maybe come back up and test 18,000. I'm not sure. Just lots and lots of big moves. And even big moves as I've been talking, right? Where, we've rallied up. We've went all the way up to 940s. And since we've started, we're already back down, 50 points. Like these have just been very, very volatile. Even during slow markets, we're seeing 50 plus point moves. and it's just hard to trade, especially if you're trying to trade minis. Minis is even harder, so always going to be suggesting micros. Micros is the key in this market. So let's go ahead and actually let's jump to Nikkei. Nikkei's been crazy, and yeah, sure enough, it has not changed on how crazy Nikkei really is. So let me start on the 60-minute chart, and yeah, guess what? Sure enough, this is something we were talking about, and I wanted to point out this fib retracement, like we did that last night when we were talking. This, sure enough, that was it, right? 61.8, and then we sold all the way back down. So that would have been a great short on the Nikkei if someone took advantage of it, but here we are. We had another nasty sell-off, and if we're measuring this sell-off, it was 5.5% down from that high, so another 5.5 sell-off. And even tonight, we had a bit of a sell-off tonight, just an hour ago. And if we're going to measure what we've rallied since, we're up 3% in an hour. So that goes to show you how volatile this Nikkei is. And here it is. This is a 5-minute chart. And sure enough, we've 20 minutes before I started class. So 20 minutes. There we go. That's 3%, 3.25% in the last 30 minutes here on the Nikkei. So it's definitely not for the faint of heart. You can't really scale down on the Nikkei because there's no micros. I'm just not trading, not touching it, staying away from the Nikkei, and I'm going to be focusing on other markets. Let's take a look at crude oil. Crude oil, we're starting to see what I was looking for. Yeah, sure enough. Let's take a look. Crude oil, we were looking for a break of this flagging pattern, whether buying or selling. We did get that break. If we were able to get in, that was a beautiful trade to the long side. We did push up into these 75s. That is a beautiful level. And yeah, I think the question now is, do we continue this trend? Do we continue to find higher lows and higher highs? But so far, so good. We did see a little bit of a sell-off back down to the 74.40, which is an interesting, if we did not get into a long, or if you didn't catch the long, then obviously the retest of this resistance to become support worked out pretty well. And I think it's more of the same. The way that I'm seeing it is I'm going to be patient, and if I am going to trade crude, I'm going to be looking for the setups I want to see. Maybe we get another pullback down into the 74s, and then I'm going to be looking for another technical pattern to get in long. But beautiful trade, beautiful setup. I didn't trade it, unfortunately. I haven't really been focusing on crude oil, and I think I said this last night. I probably should have, because there's been some great opportunities that's presented itself in terms of patterns like this on the hourly, and to catch $2 on crude is really nice in this type of a market. And maybe this is something to be said, where when the NASDAQ is going crazy, and I sometimes focus on the NASDAQ, or whatever markets you're focusing on, if it's being difficult to trade and it's crazy in volatility, then yeah, sometimes it would be worth it to switch and to change markets in terms of, let's take a break from the NASDAQ, let's take a look at crude oil or maybe even gold, and it's a lot more calm. And I don't want to say relaxed, because trading is definitely far from relaxed at times. And as we start to zoom into a 5-minute chart, yeah, that pattern starts to look a lot more clear, right? This is however you want to draw this. It's a pattern. It's a zone. We had that beautiful breakout. You could see that, big breakout. And then here was another area of that could be resistance that became into support, right? This is just zooming in, and you could start to see these technical patterns play out on a smaller time frame, a little bit more clear. And sure enough, there is buying opportunities here, having a breakout of this consolidation, and the kind of the repeat, right? These patterns like to repeat themselves. Same thing where we broke out of this resistance became support, and another beautiful buying opportunity during the New York session. So patterns love to repeat themselves. That's one reason why I absolutely love technical analysis, is for this exact reason. When they work really, really good, and it almost feels like it's easy. And I don't want to say easy in the market, but yeah, when the technicals play out this well, of course it's hindsight, and hindsight is easy to do. It's a lot harder to do it in the moment, but yeah, you can see very basic, very simple, technical patterns. But I'm going to wait for a pullback and see if we can find opportunities to get in long on crude. I don't want to be getting in long already based off of that 1 hour chart. I would much rather, here's that 1 hour chart, because the trend's still down. The trend is still down, and you can see every time we've had a nice rally, it's met by a lot of selling. So yeah, this could be one of them where we could meet a lot of selling. So I'm going to be patient. On the flip side, if you are looking to get in short, let's try and look from the flip side. If we want to see a sell-off back down towards $70 a barrel, then yeah, this could be an opportunity to get in short. We are kind of at an area of resistance. There was some consolidation here. I would much rather look for 76.30s. So me personally, I struggle with shorting markets. I have such a bias to the long side when it comes to analyzing markets, and sometimes that is a big flaw, and I could be hard-headed. But yeah, I would much rather wait for like a 76.50, some type of resistance here, or a run. But yeah, maybe this could be a good opportunity to get in short, or find a reason to get in short, because every time we've had a rally like this, you can see it's been met with some major selling for the past month. So instead of maybe looking for longs, maybe there is a great opportunity to get in short. And the more that I'm looking at this, I'm going to take a look at that. There was a lot of resistance here, and if we extend it, maybe that was it, right? Maybe there is a reason to get in short for crude oil. Now, that being said, one thing I wanted to point out, and I said I was going to do this before, we still have a few minutes, is the Topstep indicator, the Topstep daily levels. So let's take a look at this. Now that I went through and I did an analysis, let's take a look at Topstep daily levels. Now, if you guys are new, or if you don't know what those are, these are just key levels integrated from Topstep's team. We have coaches, Hoag, and a lot of the coaches that trade, and they try and identify these key levels. Now remember, it's not a signals class. I want to continue to make that clear, because no matter how many times I say that, I'm sure there's somebody out there who just uses these as signals, and just really trying to make that clear. So yeah, these levels have been pretty dang good in terms of the way they are reacting around support and resistance zones. I mean, immediately you could see this one right here at 74.56. That was a support and resistance zone. There's a lot of chop. There's a lot of zones in here, which makes sense. There's a lot of chop. There's a couple to the downside. This one's very faint. I don't know if you could see it. We have this major one up here at 77.25. So I can see where that one's picked out. Let's take a look at the 5-minute chart and see how this is looking there. It's a little messy in this chop. We broke out of that, and you can see this was that one around 74.56. That looks pretty well. But other than that, there's not really anything where we're at. There's this one at 77.25, and then of course this faint one down here. I'm going to continue to watch these. I just really am curious to see how this works. Let's take a look on how it looks on the NASDAQ real quick. These support and resistance zones. I'm going to start with an hourly. Maybe I could have these. I really don't like my charts to be too messy. And you can see how this can make the charts messy, but let's look. So this blue one, 80.70, that's right there at this support zone. We don't have any where we're at now. It looks like we've broken down, and that's something to think about. There's no levels all the way down here. We've broken down, and we've broken all the way through them. There is a level to the top side, 19,022, but all of the levels just completely broke through them. It looks like there was a nice reaction around this pink one, 250s, 260s. Some traders, these levels are in point. These look pretty good on the NASDAQ. I like it. I like to see that. Now let's go ahead and jump to gold. We know gold, the beautiful gold trade we talk about at 8 p.m. Central. And take a look at this. There are a lot of key levels right around this 24.25. So that being said, I'm curious to see how gold reacts down here. There's a lot of levels in this zone around these 20s, these 24.20 levels. There's a lot of the Topstep daily levels here. We have maybe one down here at 24.14, but then we have two of them up here at 24.52 and 59. So I'm going to be curious as I trade this gold. Let's go ahead and zoom into a 5-minute chart. And there's a lot in this zone. So I'm curious to see, because and the way that I'm reading this is that maybe there's a lot of support. There's a lot of daily levels in these 20s, and if we break down below that, maybe there's a free fall. Or if we can break out of these levels, then we can maybe look to hit some of these other ones. I don't know. I'm curious. I do see why this one's here. I could understand these levels. This is a big zone. There's a lot of resistance here, and there's a lot of buyers over around this 60 level. So I get this. I could, myself personally, I would understand making a zone right here. That's a really big zone. And we have a level at the top of the zone and a level at the bottom of the zone. So I do like that. And just a lot. There's a lot of chop right in these 24.20s. So it'd be interesting to see if we could break down or break above these levels. So I'm going to go ahead and get rid of them for right now. And let's take a look. Let's zoom into the 1-minute chart. We do have 7 minutes. 7 minutes. Our regular 8 p.m. gold trade. So let's see. I'm going to be a little bit, dare I say, biased to the long side. I don't know, because if we do break down, like I was saying, we could see a nasty sell-off again back down toward these 18s. We know that all the way back down here on August 5th, we seen 2400 touch, but it looks like we're starting to find a lot of buyers in this area. Let's watch it. Let's see if we could get a nice trade on gold. 8 p.m. Central, we see a nice spike in volatility. The first thing I am seeing is higher lows and higher highs. So that is something. Higher lows, higher highs. We do have some, resistance coming into play right at 24.7, 24.9, around these 24s. So we're consolidating. The question I'm thinking of is, do we break back up? Or are we going to fall below this support trend line? We still have 6 minutes now. And like I said, as I wait, remember, feel free if you want me to review your statistics at the end of this gold trade. Just put them in there. I see that we got a lot already coming in. It's pinned to the chat. And let's get to some questions. Oh, yeah. Guess what, guys? Nick Furtick was supposed to join me, but he's been having internet issues. That's the dreaded thing with internet, where sometimes, even though we want to trade, when you depend on an internet service provider, that happens. It's life, right? You have issues with the internet. But that being said, he's getting his own session. I'm extremely curious to see how it's going to go. Maybe I could join him one of these days. But yeah, it's going to be a Globex kickoff Sunday at 4:45 p.m. Central. So Sunday at 4:45, Nick is going to be there. I'm curious. Yeah, I'm interested. Maybe I could join him one of these days. A weekly kickoff. So that's going to be great. And then also my great trading buddy, up there with Rips as well, Coach Jay, that usually joins me on Wednesday nights. He is going to be doing At the Buzzer. I know he does At the Buzzer in the Discord, our Topstep Discord, but he's going to be doing At the Buzzer Monday through Friday after the close, which is 3:15 Central Standard Time. That's going to be fun. I enjoy his At the Buzzer in the Discord, so I'm curious to see how the At the Buzzer is going to be on Topstep TV. So those are the two new programmings, and it's going to be awesome. Sunday at 4:45 Central, 5:45 Eastern is going to be Nick for the Ticks. Yeah, Michael T. At the Buzzer is usually on Discord, but it's going to be here on Topstep TV on the YouTube. And we're just waiting for gold to move. So far, we still have about 4 more minutes until then. Yeah, a lot of fun stuff. I'm excited. Topstep's growing. Topstep's growing. Topstep's always doing amazing stuff. Topstep TV's expanding. I love to see it. Nick Furtick's new session on Sunday. Coach Jay's, At the Buzzer is going to be moving to Topstep TV's YouTube, and I love it. It's always something to be watching, and 100% dedicated to the traders, and that's why I am here. I really enjoy it. Yeah, At the Buzzer, I think it's a play on words, unlike sports or basketball. When you shoot at the end of the game, you have the buzzer beater, and right after the market close at 3 p.m. Central, it starts at 3:30 or 3:15. 3:15 p.m. Central is when it's At the Buzzer. Tech says they're growing. Yeah, you hear, if you guys, and also I mean, it's not really much to say. Coach MP's always saying that as well. Recognize where weaknesses are and you improve them. So I do know Topstep is doing amazing things. It's been a crazy summer. Been a very, very crazy summer. Good summer as well. As you can see, I now have this intro, the intro and outro. It's fun. I'm still getting used to it. I'm still growing. That's why I always ask you guys for suggestions on slow markets. 2 more minutes. Let's get to some questions now. We got a few questions coming in. Do I miss NinjaTrader? Some aspects I do miss NinjaTrader. NinjaTrader platform was my old platform. I still have my personal account, a couple personal accounts on there. Topstep X has a lot of great things. So there's still some things I'm getting used to on Topstep X. Today I made a mistake in my live account. And 1 more minute. Let's watch this. The mistake I made on my live account was I thought I was on micros, MNQ, but I wasn't. I was on minis. I was on NQ. So there's still some things I need to get used to on Topstep X. And it's purely just repetition. The more I trade with something, the more you use something, the more you get used to it. So here we go. 1 minute left. Let's see. Yeah, that's something you always need to be aware of. Making sure that you're on the correct instrument, whether it's the mini or a micro, and then make sure you have the correct position size. It happens to everybody. Myself, we've seen it happen to MP. It's just one of those checks. We're professionals. We want to be professionals, become consistent, and make good money. I'm going to go ahead. We're starting to break to the long side. Ooh, don't want 10. We want 1. And as I said that, I almost just popped in 10 contracts right there. Not on micros. This is a mini. Well, I missed it. That was the entry. Ooh, let's see if we could get a pullback now. Dang it. I was a little too slow, little too slow. That was it. That happened really fast. That just the consolidation break. I had that set up too. Oh, dang it. That was it. Well, I should have done the stop market, but I mean, lately the way the market's been acting, and I kind of moved away using stop market orders, because on a situation like this, I probably would have been filled like long here, right? So I would have had probably $2 worth of slippage using a stop order. So I've been trying not to use it. I mean, especially when you're trading the NASDAQ, right? It's a lot more volatile. So I've not been using stop market orders. But yeah, in a typical market conditions, yeah, I would use a stop market. But yeah, that was an immediately breakout and straight up. That was the trade. That was a beautiful trade if I could have got into it. That's horrible. That sucks. That's it. Blame it on the charts. Blame it on the chat. Yeah, chat. If I was not distracted by the YouTube chat, I would have made so much money on this one. Yeah, and I'm talking about buy stops, not stop losses, buy stops. And what a buy stop and what that type of stop that we are talking about is, for example, if I want to get in long, I go here and I put stop buy. So that is a stop buy. And what that means is it will not trigger me into a long until we break through that price. So I'm not talking about a stop loss. I'm talking about for an entry, but here we are getting this pullback. So let's see if I could get into a long on this pullback. That pullback happened fast. I wanted to see if we could come back and retest. I think that could have been it. That could have been that order. Trying to, yeah, I'd like to see a pullback. That was quite the move at the 8 p.m. That's right at 8 p.m. Let's see if we could get. Just wait for a pullback. I think that's it. That's the feeling when you miss a trade. We'll continue to watch this. We're starting to slow down with the volatility. That was a $3 bounce, $4 bounce almost. Yeah, $4. So that'd be $400 in one contract. I'd like to see a pullback and then find an opportunity to get in on this gold. If not, then that was it. Like, that's sometimes what it is. When you miss a trade and all you could do is understand, like, okay, great. What I was looking at was this, right? And then we had this consolidation. And that was just a beautiful breakout trade. You know, very much to what I was saying every single night, or what I was saying last night, is the markets are different, right? For the past almost 2.5 months now, every single night at 8 p.m., we've been watching the gold trade at 8 p.m. We see a spike in volatility, and it's different. Like tonight, brand new. This has not happened very much. I don't think this has happened at all. Just immediate break, and that happened in a second. Like, that was absolutely 1 second. We went from trading at 24.4 to 28, right? So completely different than what we've been seeing. Let's go ahead and see what are the other markets doing. Let's check around. Like I said, being patient. NASDAQ is starting to move. This could be a beautiful breakout trade to the long side. I like this pattern. This is a good looking pattern where we're starting to rally, a beautiful pullback. And then the question is, do we get a break? And if we do break, let's see. Ooh, that is going to be interesting here. Look at this resistance. There's a lot of resistance here. If we break, then, possibly, it's funny because there's a lot of volatility. Typically, I would see this and say, oh, that's probably 5-10 points. But no, that is 40 points. That's 40 points worth of a move. To get to where we closed during the New York session, we closed, or the official close is right around here. But there is one. Maybe we should start talking about NASDAQ. And maybe 18,000 could be in the books tonight. Maybe 18,000. I'm going to watch this. Maybe we find a NASDAQ trade to be talking about and do an example of. Since we did miss gold, there could be, gold's just pushing. Dang it. That was a great trade. That was great, an opportunity. I think that's something, even though I missed it, that's fine. You can't be mad. It's just another good example that beautiful trade would have worked out really, really well, would have been triggered in somewhere down here, and gold's just pushing to the long side. Love it. I love it. It just means there's opportunity still again tonight. But let's take a look at NASDAQ. I do see a breakout opportunity here on the smaller time frame. So let's here's something I want to talk about. Okay. So talking about NASDAQ, if I want to trade this, look how horrible the order is. These order books, there's no liquidity, just nothing. So what I'm going to do, I'm going to switch to micros. So switching to micros, and the liquidity is a bit better. See, there's a much tighter bid and ask. So let's do that. Let's go ahead and I'm going to get in and play for a break. I'm going to get into 3 micros, and then I'm going to get in and add if we decide to break up. I'm going to use one of those beautiful buy stops. So we're going to use a buy stop to get in if we get that continuation to the long side. So let's watch this. My first target, let's see. My first target I'm looking at, I'm going to jump back over to a 5-minute chart. So trading micros, very, very small, sizing down so that way we could have a wider stop loss. And so I'm going to just make sure we have just a stop loss just in case something crazy happens. Want to scale in, and I'll be okay scaling in, looking for a take profit right at maybe 18,000. Maybe we get a nice break. And then I could also, close 1 contract, 2 contract, 3 contracts out if we do break up. But sizing down, micros, extremely small, three little micros. Let's go ahead and zoom back into the 1 minute, and maybe we could find another reason to scale in. I'm going to leave my stop loss right there, right below 857, which is still interesting to say. Risking 60 points, that's a lot in terms of points, but in terms of dollar amount, $400. That is not much at all in terms of the way this market volatility. So what I'm going to wait, I'm going to see maybe there's a way to enter in, and I'm talking about building a position. Now remember, this is not a signals class. I'm trying to walk through an example. I did miss that gold trade, but let's go through. I think this is going to be a good example of how I like to scale in. Let's go through it. Playing for a breakout. Of course, you can't say you long the top until after the fact, right? Because if we were right here and you got long right here, you could say, oh my gosh, you longed the top and we sold off. Well, no, it's not the top, because if we keep going up, then the top could very well be higher. So just trying to scale in for a break, to see if we could run up to either 18,000, maybe 17,000, 70s, 60s. But looking to build a position. Like I said, this is not a signals class. This is purely a trade that we could talk about, how maybe to scale in, how to put a stop loss, how to scale out if it does work out in our favor. So I like this as a stop loss purely because we had a nice support here and we had nice support here right around these 60s. So keeping a stop loss somewhere below that is where I like to keep the stop loss. And then I am perfectly fine scaling in. So perfectly fine scaling in anywhere between my original entry and where my stop loss is. So I am fine adding to a position until we break this. As soon as we break this, I'm out. I hit my stop loss, I'm done, I take a loss. Right now my risk is about, let's keep it there, 460. So you can easily scale in anywhere based off the way I like to trade, and this is just an example, anywhere between now and my stop loss, depending on how big of a position, right? This one, I started at 3 micros. You know, sometimes I like to start at, say, 1. Maybe you started at 1 micro, and then you add 1. Let's say you add 1 if we get to another level. So we're starting to see a little bit of, you know, support coming in here at 9/16s. There could be an example, say, okay, if we find some more support, maybe we close up there, we look, okay, I could add another one, right? And then maybe we want to get into, let's just say instead of 3, you could also add if we're going and we're going to break out, right? So there's many ways to add. I'm going to move my stop loss a little bit tighter. I'm going to watch this. I'm going to move my stop loss to 92. Let's just watch it. So, yeah, you never, and what can be very interesting, right? And it's frustrating when it whipsaws. I mean, it wasn't an official breakout. I just hopped into 3 micros. So let's see, let's watch this, because I very well could add if we break, maybe if we break above 28, because this is a candlestick that I'm watching. Maybe if we break, I could add another one, right? So there'd be nothing wrong with continuing to add. Let's see if we could catch a break to the long side. Maybe we add one if we break there. Maybe this could be a good example to, you know, maybe we could limit, oh, let me drag that. Maybe we could limit risk and say now we're only risking 160, right, now that we turned around. So that could be a good example as well. Let's watch this. Now that we made that pivot, that is a reasonable stop loss for me. Risking $160, risking 160. That's a reasonable stop loss. You know, maybe something down here. I mean, that's almost $600 now. I would be okay with a stop loss on this, or a stop loss, you know, just looking for areas where there was buyers stepping in. But for this example, let's just go ahead and keep it at 912. And let's see if we can continue to add as we start to break out. So adding 4 micros, very, very small, right? And let's see how the NASDAQ starts to react. So whoever said I bought the top, I bought the top for 3 minutes. 3 minutes, that was the top. Or maybe 6 minutes, right? Or maybe it was the top. Maybe we do sell down and say, dang it, I got long the top, right? Yeah, well, it's not a breakout. I mean, I don't say, yeah, to me, a breakout would occur, you know, if we can hold above, we can hold in these 40s. If we could hold in these 40s, then I would say that's a really good breakout. I'm going to go ahead and I want to scale into this. Scaling in, using micros. As we break and as the market goes in my direction, you know, very well, I'd like to see if we could build that position up. Yeah, it's a failed breakout so far. But I like this. Still risking $162, kind of just consolidating around here. Scaling into a position using micros. What would be your possible price targets? The first one we were looking at is maybe we look for a price target. There's where we closed, right? Where we closed during the New York session could be one right around 960s. The next one is this key, 18,000 level. So 18,000 could very well be one of those areas. So looks like we got triggered into a fifth micro. So we're in 5 micros, which is 1/2 of a mini. 1/2 of a mini. So 5 micros, 1/2 of a mini, sizing down, but then scaling in as this trade's going into our favor with this stop loss. So still only risking $200. Yep. And then we'll see. This market is very, very volatile. Boom. Wow. There we go. There we go. $312, $312. Let's see where we go. Oh, whoa, whoa, whoa. Look at that. Look at there. Let's go ahead and let's just, let's see if we could get some more. Okay, gonna have one there. Oh, let's see if we got another one there. Gonna trail my stop. Keep there. So, how's that? Was that the top? Was that really the top, guys? That wasn't the top. Top is a little bit higher. So, yeah, that was that wake you up real fast, right? So, caught out of a couple there in these 60s, 70s. Let's see how we consolidate. See scaling out now. Now we could scale out, right? That's the beauty about multiple, and there's another beauty about micros, right? Now we have the beauty to scale out of a trade. We just closed out of 2. Now let's see if we could continue to find buyers. You know, I dare say if we come back down to this zone, maybe this zone can become support. That could be one thing as well. And so far, so good. We're up about 30, 40 points here during the Asian session. The Asian session, we're up 30 points in a minute. Wow. So let's see. I added as much as I wanted, right? You could definitely have added more. Okay, this is purely an example. That was one heck of a move. So let's see if we can find some buyers. The first thing I'm looking at is, like I said, this zone where we closed. We broke out. We broke through into it. Maybe we find some buyers into these 60s, 60, these high 59s and these 60s. Let's watch it. But very, very volatile market. This is a beautiful example of why you scale down. And yeah, take some risk off. Let's see. I might want to get out of maybe 1 or 2 more. Yeah, let's go ahead and get out of a couple more if it will allow me. And now micros. Another nice thing about micros, the spread's not too bad. The spread is not bad at all. It's staying nice and tight. Nice and tight. So we see these micros over here. It has a 1 or 2 tick spread. But then if we look at the NASDAQ, if we switch over to the NASDAQ, look how ugly that looks, right? I mean, it's a little bit tighter than what it was, but yeah, it's just really, really ugly. Let's go ahead back at the M and Q, and there we go. I'm gonna go ahead and move my target. You know what? I'm taking my target off. Take it off, because based off of that, I was not expecting that. No, let's continue to watch this. I'm gonna just go ahead and get this out of the way, make it look a little bit better, and let's see if we could find more buyers, right? So immediate rally. Now we're starting to consolidate. So maybe we see some type of a flagging pattern or consolidation, just some type of pattern. And very much like I was talking about on crude oil or anything else, right? Look here. This happened earlier. This is a nice, beautiful breakout, consolidation, continuation. Breakout, consolidation, continuation. Will we get that? I don't know. We seen it just a second ago, right? We had a breakout. We got and we traded this pullback. We had the direction. We were playing for the long, and it worked. It very well. Now, don't get me wrong. We very well could have just sold off, but trading is not 100%. You can never be 100% correct. So immediately what I'm looking for right now is a way to trail my stop loss. Like, how do we trail my stop loss? How do we get out? How do we get in? And we're still in 4 contracts, micros. These are micros, not minis. So far we've locked in $200 on micros. pushing the highs now. So, one example that we could do, let's go ahead and mark it, is we could move our stop loss to, 959. So could move stop loss here. So stop loss, I'm going to say it's aggressive, because to me this is aggressive. Trailing stop loss. So there we go. I'm just going to say this aggressive trailing stop loss. We'll see. We'll see how this works out. Pushing up into these 70s. Yeah, so aggressive trailing stop on that one. Kind of not breaking out yet. Not breaking out yet. Don't like to see that. We pushed up and now we're starting to fail. Let's watch. We'll continue to watch. I don't mind taking some time. Well, let's see. Let's take a look. What's gold doing? Did gold move? Did we make a good decision? Yeah. I'm so happy we switched over to the Nikkei or the NASDAQ for tonight. So we'll continue to watch this, see if we get some more consolidation. Oh, that's the NASDAQ. We want to switch over to the micros. And so, okay, aggressive stop. We would have been stopped out right there, right at 59. So aggressive trailing stop would have been stopped out. Now, let's see if this is just a pullback for a continuation or if we're going to reverse and get stopped out. Yeah, that is example. So there's a lot of ways that you could trade this. And this is one reason why I love doing these trade examples during class. You don't have to move your entire stop loss, because I'm in 4 contracts. You very well could move your, like say, okay, if we hit this, you could close out of 2 of them and say this is a 2 contract stop loss. And for example, I could have just closed out of 2 of them right there, right? Or 1 of them or 3 of them. So there's so many different ways that you can trade in terms of moving your stop, closing out of some, closing out of others, adding, closing. It's just, that's the beauty of trading, right? It's the same market. We're all looking at the same market, and we can each see it the same way. We could each manage the same way. And it's proven to me time and time again why I could give everybody here, all 2,100 people tuning in today, I could tell you exactly where to get in. And I could say, everybody here, buy right now. And I won't tell you how to manage it. And at the end of 30 minutes or at the end of that trade, everybody will have a different result, right? So I think that's one of the most interesting things in trading, where you could give 2,000 people the exact same strategy, and at the end of a month, all 2,000 traders will end up with different results, because we all view the market differently. We all manage the trades differently. Some would have already taken profit. Some, maybe they would have been stopped out of the trade. I mean, the people who said, I bought the top, they were probably selling, and they just, they're probably not too happy right now with the way the market reacted. Others, were buying the pullback. Others were buying here and got stopped out. Like, there's so many different ways to trade this market. There's no right or wrong way. It's just the best way is to trade it consistently. And that's it. Trade it consistently. Look for a positive expectancy over a long period of time, and realize that one day does not make or break a strategy. 1 week does not make or break the strategy. It's all about risk management, trade management, and so forth. And hopefully that's what I'm here to do, is help everybody here understand and hopefully help them, right? Because I don't know everything. I'm still learning as well, right along with you guys. But examples like this are just really great talking points that we could talk through, and hopefully be able to answer some questions, right? Size does matter for trading, for this example. So here we go. Here's another example. This is not as aggressive, but this one is a little bit less aggressive, right? So this one is less aggressive if we were to move a trailing stop. So we could just say less aggressive trailing stop. So there we go. So we could just do that. Boom. I prefer this one. This is my preferred trailing stop. So I'm going to go ahead and do it. That's my preferred trailing stop right there. Let's see if we could go ahead and have that continuation. So yeah, some people would have been stopped out, right? There's a good example. Some would have been stopped out there. Some would have been stopped out there. Maybe some people were adding in, or some were just barely getting in. Coming up, test these 70s. We'll see if we get these 70s, get another breakout to the long side. Like I said, I'm really looking for a push back up to this resistance level around these 90s. There's a nice little break. Let's take a look. I want to see how we react, if this is going to break out or fake out. Right here, right now. Let's see. See, increase in volatility. It's starting to move a little bit quicker, trying to make some decisions. Buyers and sellers fighting right into this zone. Man, this is fun to be talking about this during slow markets. We usually never see this type of action in slow markets where I'm scalping, I'm actively trading, I'm talking about volatility, buyers and sellers fighting in an area, and seeing this type of movement at this time of day. This is so interesting. So here we go. So we got another question in. What do you mean when you say see profit, take profit? This could be one of them. See profit, take profit would be as soon as we broke out, boom, just take profit. Other ones is like, maybe right now, see profit, take profit. We could close out when we start to see a reasonable expected move. But let's see. I want to see how this reacts right here, whether it's a fake out, breakout. I'm going to go ahead and close out one. Got rid of one of them, locked in a little bit more profit. Starting not to see that breakout that we did. We very well could break out, but we started to see some more sellers. And I say see more sellers. We're not breaking out like we did, right here. This was a true, pure breakout. We hesitated for too long, so I took one contract off. So there we go. Still locked in $300. There you go. Beautiful example. Trading micros, trading small. You can hit that $200 target. It's not hard. It really is not. In this type, especially in this type of a market condition, the $200 target here at Topstep, to work your way to receive a payout in express funded accounts or live accounts, it really is not hard to do. We just did it in slow markets for example, using micros, not even a full contract, not even a full mini, 7 micros. So yeah, we'll see. This is looking a lot negative now, not too good. I'm going to condense this a little bit so it doesn't look too dramatic. Still, I do like this stop loss. Stop loss is also below all this crazy wicks during the end of the New York session. So we can still see a lot of buyers in this zone. Well, let's watch it. Just watch it, not get too crazy. And this is just great talking points. Now remember, good reminder, if you guys want me to review your statistics, I put that link in my Discord channel or at Topstep Discord, my channel, and we can go from there. Ooh, not a slow markets at all, guys. Not slow at all. And you know what? As we're talking about this, and as we're talking about, how different traders approach the markets, I think it's really about the psychology, like the psychology side of trading. And I do know that Topstep is going to be having, I think it's, what's his name? Jared Tendler. Jared Tendler is going to be returning to Topstep TV August 14th, Wednesday, August 14th at 11 a.m. Central Time. So that's going to be great to see. Jared Tendler, he's going to be watching, and I think they're even having Brett Steenberger. Yes, Brett Steenberger is going to also be back on Topstep TV as well. Jack's Capital. Bro, gambling. If you're gambling, then trading's not for you. I'm going to go ahead and move my trailing stop. Move my trailing stop to 60. Getting this wick. Yep, moving my trailing stop to 960. Locking in those profits. If we get another push, I don't mind closing out of just one more. Because we are seeing, it's not getting that momentum burst that we've seen earlier. Yeah, people just see the trading differently. It always looks like gambling when you don't understand what you're doing, right? I mean, to be honest, if you don't know what you're doing, yes, you can easily say that traders who trade and they don't know exactly what they're doing and they don't have a system or a strategy 100%. You're better off flipping a coin. All right, we're starting to see, let's see. I'm going to watch this. If we break below 71, I'll close out of one more contract, but I do want to leave a runner on. Like I said, my overall target is going to be 18,000, 18,000. See if we get a push up here. Okay, going to get out of one more. Little micros, continuing to lock in profits as we go. My less aggressive trailing stop is now, I'm going to say right there. That's where I like to be in. Right there. Right at 61. All right, we're holding these 80s. I like that. We are really close. We're getting up there, getting up to 18,000. Let's see if we could get that. So, yeah, we're struggling. I'm starting to sound like rips. I mean, it's scalping, right? You're scalping, you're watching the market, you're looking at a smaller time frame and just giving the dialogue and dialect that's going, kind of talking out loud, right? Thinking out loud and trying to give commentary on what I'm seeing in the market, how the market's reacting. And rips is a momentum trader. We're seeing a lot of momentum and scalping, really quick movements here during slow markets. So I'm taking that as a compliment. When it comes to scalping and doing this, rips is second to none. I really wish I could read the order book like he does on these quick trades in and out. So yeah, $400 realized, and I have 72 locked in micros. But it's less about the money and more about the trading concept. Okay, so trading concept, 100%. Yeah, thanks, Bernie. Trading concept, not the dollar amounts. Can't stress it enough. So immediately I'm thinking about moving my stop loss to 65. Let's do it. I'm going to start getting a little more aggressive with this stop loss. So moving it right there to 65 on the low of this candle. We found some buyers stepping in there. And I've already closed off 5 out of the 7 contracts. Would the 100 tick help? I don't know. Let's take a look. 100 tick. Yeah, you know what? The 100 tick looks a lot cleaner. Let's just get out of this. It looks like it's going to... There we go. I'm out. So, yeah, this 100 tick chart looks a lot cleaner. You could see it, right? Beautiful double bottom, rallied, and you can see these pivots much cleaner on the 100 tick. And we were out, got stopped out right there. And there's a good example of trailing. There you go. I think we had a little bit of everything, scaling in, scaling out, taking profits using buy the ask, and we even trailed it and got stopped out. So all of those beautiful examples tonight. I'm glad I switched over to the NASDAQ. It was great. I'm happy with how it went. And that was 34 minutes, $470 using micros. And like I said, not a signals class, for educational purposes only. I really like that. That was one of my favorites when I'm able to walk through and talk through a trade like this. No indicators, no what do we call it? nothing on the charts, pure naked charts. Feels good to be, yeah, I don't know. That's it, right? Let's get to some questions now. Let's get to some questions. What was your confirmation to enter this trade? Yeah, let's talk a little bit more about this trade, and we'll get to some statistics. Let's answer some questions as I'm going through this. What was my confirmation to enter into this trade? Now, this looks really different on a tick chart, but let's jump to a minute because I was watching this on a minute, 1 minute chart. And yeah, so I'm going to walk through this trade and I'll tell you exactly what I was thinking when I was thinking it. Immediately, what I was looking at was we pulled it up and what I was seeing was exactly like this, right? Very simple. We've been rallying. We've went from basically 17,700s all the way up to 900s. Big rally. We've seen a beautiful pullback and we were starting to gain momentum and rally again. And so, sure enough, we started to break out. I entered into 3 micros. 3 micros are very small with the intention of scaling in. So, entered into 3 micros. Let's actually do this. I could pull up the executions. Boom. Ah, there we go. There we go. So let's walk through this again. So you can see where I entered into those 3 micros right there, looking and trying to play a breakout, not buying the top. That was an intention. Break out. Sure enough, I got in there with the intention of scaling in. Now, my original stop loss was down here at like 50s, and my intention was to scale in if we got a pullback or scale in if we continue to break out. So sure enough, we did get a pullback, and boom, started to scale in. Got into 1 contract there. Got into the other 2 contracts on the breakout, and sure enough, closed out of 3 as we started to show and run into some resistance. Got out of another one, and then another one, and then got stopped out on those final 2. So let's take a look what it looks on a 100 tick. So on a 100 tick, does it look any different? Let's see. Yeah, on the 100 tick, it looks a little bit different. So comparing it to the 1 minute, we just went on what the 1 minute looks like. And the 100 tick looks a lot different. You can see I was trying to get in on the breakout, added on the pullback, added more on this breakout. Interesting. Yeah, it looks like the timestamps might be a little bit off, and it looks a lot better on this. So there's the trade. Simple, easy, straightforward. I think it's going to be a great example of scaling in, scaling out, using micros. So yeah, Andrew, I know if you're listening, could you put a timestamp on this trade? Because let me know, guys, would this be a good recording for just if we could clip that 5-10 minutes of this trade, or it wasn't 5-10. This was a good 20 minute trade. This is a beautiful example of how to scale in and scale out using micros. So let's clip it. Moderator, if you can, please get the timestamp of when that started. I'll send it off to the team. We'll see if we can get that into a recording so that you guys could watch it over again. Then you don't have to watch the whole 1 hour and a half slow markets class, but beautiful example. Love it. Let's move on to some statistics now. So some of your guys' statistics, we could go through them, and I think that is going to be a great segue. Let's see. Thank you, Andrew. Let's see some of your guys' submissions here. Remember, it's at there. I'm going to go ahead and unpin it now because we have a lot of submissions. Man, I want to see someone who's lost money. Let's see. I got to go through them. Remember, I do like statistics in terms of the more trading days you have, the better it is to analyze your trades. So here's one. I like this one. This is going to be a good one to talk about. This is a express funded account. Here we go. Express funded account means you have more pressure, right? You have more in the game. In an express funded account, you can receive a payout. So this is not like a combine where traders, have a lot less emotions. Express funded account is where we're starting to see more emotions come into your trading. All right. Ooh, I like this. This is a new suggestion. You guys see it. Love the Coach T tips. Overall, ooh, love the amount of trading. Let me make sure I'm going back and I'm taking into consideration everything. There we go. Let's see. Does it go all the way back? Lots of trading. I like this. There is a lot of statistics. Let's go all the way back as far as we could go. 14. Wow. More, even more. So immediately what I see is this trader has had an express funded account for a very long time. So look at this. This is really, really good. The fact that this trader has been in the account for so long. You're not just jumping in and then blowing it, right? So total P&L $1,400. So minus $1,400. From, it looks like the 27th. So I'm just gonna go ahead and do that. May 27. We'll just do 26. Okay. So for a good period of time, that's what 2-3 months worth of data. So minus $1,400 on this one. That's tough to deal with, but I think I like this in terms of there's a lot to learn. There is a lot to learn by losses. I could always come in here and we could view amazing statistics, amazing traders, and we could view like, oh, great trading, making lots of money doing this. But I think we could learn just as much, if not more, from analyzing statistics like this. A losing 2-3 months, a losing account, express funded. There's a lot of emotions in this. Let's take a look. So minus $1,400 in a big amount of time. So I think that's great. It means that sizing is correct. I really do agree that sizing in this account is correct. If you can trade for over 2-3 months in one account and only lose $1,400, you're doing something right. And I think just based off of my first glance is the sizing is correct. The trading win percentage, that's not bad, 41%. But given the win-loss, the average win versus average loss, that's right around 1. So whenever you're around a 1-to-1 risk reward, you need to be 50% or better with your winning trades. If you want to be trading 41%, what you'll need to do is find, and it goes hand in hand. So if you're trading around 40 to 41% on your winning trade percentage, you need to be at least maybe 1.25 to 1.5 on the risk reward to start to see a positive expectancy. And then vice versa. If maybe you want to stay at a 1-to-1 risk reward, then you need to be at least 50% or better to break even. So it depends on what you want to trade, or what you want to adjust and what you want to work on. If you want to work on your winning trade percentage, then that's it, right? You need to understand that this winning trade percentage, you need a higher risk reward, and vice versa. This risk reward, if you want to stay with the 1-to-1, you need a higher winning trade percentage. Next, winning days is a third. So 1/3 of your days winning profit factor. That makes sense. Of course, you want to have a profit factor of 1 or better. But yeah, that's where I was saying you had, it looks like 1 or 2 days like that really hurt this account, where you could see you have a lot of small losing days, which is great to see. A lot of small, but there you have. How do I want to put this? Is look, 1, 2, 3, 4 days, maybe 5 is what really put damage in this account. 5 of these days out of the entire 3 months put the most damage. Like, it looks like you're doing really well, either just not trading or keeping it very small, breaking even, very, very small. But you can see 1 or 2 really bad days can do a lot of damage, where one day, will make up for a whole month's worth of profit. So let's go ahead and scroll down and see. Let's see what Coach T says. Your largest win was $300 and largest loss was 140. So that's not too bad when it comes to the extremes, right? Your extreme of a winner and your extreme of a loser is not that bad. Your most active day is a Monday, and your most profitable day is a Monday. So there could be something to that where, maybe the more active you are, it means you have that profitable something to Monday. And the very next day, right after your most profitable day and the most active day, you have your ugliest day. That $500 losing day, I'm assuming happened here. Looks like it. So $500 losing day wipes out a whole month's worth of trading. And we're going to see that as we start to dissect more of your statistics. There's that 1-to-1. I like this. Trading small, $23, $21. Your best day, worst day that we looked. I'm going to be curious to see how long your hold times are. There's the cumulative P&L, straight, not straight down. And that's good. This is a positive. It's not where you're just going straight down and you're losing it all. I'm sure you've gained a lot of experience, a lot of trades in this account, and that comes with experience, right? You're getting experience in a high-pressured account like an express funded account. That's good. This is good to have the time in this account. Of course, this isn't good, losing the money consistently, but you're learning. You are learning a lot when you are trading like this. And we're starting to see that here. You see, if you could just eliminate, just imagine, if you could just say, I'm going to cap my worst day off at, say, $250. You've added so much to this account, just trying to cut off these really bad days where maybe you just implode, right? So really not great to see, these 3 bad days and, cut them short. This is where I wanted to see this. Okay, first of all, I like this. This is good where, you have a lot of trades. And this is where I'm saying lots of experience, a lot of time in the market, a lot of trades. It's good to see that. But you're cutting your losses short. That's a positive note. And a lot of your winners are to the long time zone. So your hold time for your winners are good. I like to see that. 121 trades. It's showing green over here, your win rate. The longer you hold your trade, the higher the win percentage. So I think I'm reading this correctly. Now remember, I'm still learning how to read these statistics on TopstepX, and we're going through this together. So this makes sense to me. The longer you hold your trade, the higher your win rate. And sure, you only have one trade over 4 hours, but you can see that there is something to that. And you're cutting your losses off, which is really, really good. Your losses off, your win rate goes down the quicker. So that makes sense to me. But let's take a look at this. This is where I think we're going to see the most value in your trading. So May, you're starting off your express funded account, small loss, small loss, small loss, small loss. That could be very emotionally tough. When you start a brand new express funded account, you take a loss, you take a loss, you take a loss, you take a loss. I do like that as soon as you start the express funded account, you're immediately using the correct size. Your small loss, that is not bad. I like it. I'm guessing you're trading micros. Yeah, micros. Beautiful. Love to see this. Beautiful. I like that. So small losses is great. And then you can see all those small losses, one good day made up for all of those losses, right? 4 bad days, loss, 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 loss. And then one good day made up for all of that. It's beautiful to see. And then, as soon as you start these 2 days, like this day, you could see how it canceled out all of your winning days. Like this one bad day just completely wrecked the entire month. This day alone. And then, of course, you had this. And the first thing I'm seeing, 32 trades, 2 trades, 23 trades, 27 trades. So it looks like on your really ugly days, you've traded more. So, this one, 15 trading, 15 trades. So this could go back to what we're seeing is when we were analyzing some of those really good traders and those really good statistics, is they were trading less. They were a lot more selective, and maybe you can see that. I don't know. Let's continue. We're just going through these statistics. Let's see. Some of your see, here's an example. One of your better winning days, only 2 trades. Yeah, still small, consistent, a lot of small green days, and then one bad day just erases a lot of them. But I think that's yeah. Anyway, I think that's good. Overall on this trading statistics, trading small gives you plenty of time in the market. It gives you plenty of experience. So I like that aspect. So I'm going to say that. Let's go ahead and move on to the next. Next, going to try and get through more of these. I think I need to be a little bit quicker. All right, this is just a combine, so not a lot of pressure on you on this type of a trader. Not a lot of pressure. It's just a combine. Good equity curve, decent amount of days. Let's just go ahead and move back and see how far we could go back. Let's see. Okay, yeah, so just a couple months. This is only a combine, not too much pressure. Immediately, here's that example, right? So you're still close. This trader is still to a 1-to-1 risk reward, but has a higher win percentage. So about 16% higher than the other trader, and the profit factor is ever so slightly above 1, but $1,600. So these little tiny things in your trading can make a dramatic difference. And I like that we're starting to see this, and hopefully I could explain this. And let me know if you guys have questions regarding what I say. So small little differences make big impact into your final results. So still, this is a upside down risk reward, right? So you have an upside down risk reward where your average winner is smaller than your average loser. Yeah, 56%. So that is a big difference. Dakota, day win percentage is only for a day. If you hover over, you can see. Not sure what you mean by that one. Interesting. So yeah, decent equity curve. This is just a combine, so I'm not putting too much weight on this one. I'm kind of just hovering. This is a smaller account, right? This is a 50K account. Average trade duration, that's a good note. There's a lot of trades. There's a lot of lots traded on this. A lot of trades in here. Going through this, very volatile. Like volatile, this is like very volatile. Looks like you just kind of caught a runner. And if I'm going to do predictive, let's just talk about predictive analysis. I don't want to say I would expect. This is just be careful when you're analyzing your own statistics. Just based off these statistics, you would think that the next, move on this equity curve is going to be down, right? Nice little rally and then straight back to zero. Rally, straight back to zero. Are we going to see a rally and straight back to zero? Try not to let that zero happen. You could see that these really ugly days are putting it back to zero. Other than that, yeah, not too much. I don't want to spend too much time on the statistics in a combine account. I want to focus maybe more on XFAs and live accounts if traders want to share that. Not too bad. Small, consistent adds up. Let's go ahead and take a look at some others. Give me a second. We'll pull up one more. Not going to look at practice accounts. Don't share practice accounts, please. But here is a XFA. Let's take a look. Here is an express funded account. Where to share? The share, I'll pin it again tomorrow. It's on our Topstep Discord. I have my own channel, Topstep Discord. It's there. Last statistic of the day. I'm going to try and get through these a little bit quicker. We'll just go through them. I'm going to still continue to get better at reviewing statistics. Andrew A. put my Discord channel link in the Topstep Discord there in the chat. That's where you would share. But I'm going to try and go through more traders. The more traders I go through, my goal is to get through 5 trader statistics a night. And I'm open for feedback. In that same channel, let me know what you think. Click on that channel. That takes me to my channel on Topstep Discord. Give me your opinion. I really want your opinion. Are you liking these statistics? Are you liking what I'm doing? Am I, taking too long? Am I going too fast? Let me know. I'm trying to add as much value as I possibly can. So express funded account. Let's go ahead and take a look. I'm going to just go back. I'm going to make that a habit. Been in this account. So I do like traders who've been in an express funded account for longer than just a few months, right? And $5,400 in this express funded account. Really high win percentage. Ooh, really low risk reward. So this can be a little bit scary. I think this is another good example. I want to talk about this one. Okay, I see this a lot, and I will tell you what one of my fear is when I see statistics like this. Okay, there are some exceptions, but this gives me some PTSD. So, and I'm going to be straight honest with you. And whoever statistics these are, pure honesty when it comes to reviewing this. I have some PTSD when I see this. Very high win percentage, 81%. And a very low risk reward, almost 1 to 3, right? The exact opposite of what I like to trade. So this is the exact opposite of me in terms of the risk reward. So risking $3 to make one, or risking like $3.50 to make one. So for every $3.50 you're risking, you're only going to make one. Or you could say for every $1 you make, you're going to risk $3.50. And you have a profit factor of 1.3, which is good. But this explains you need to keep up a really high risk percentage or trade percentage. You need to keep this trade percentage high. As soon as this starts to drop, it could get ugly, and it could get ugly fast. Trust me, I know. I've been there. I'm assuming that this trader is a scalper. We're going to go down and we're going to see. I think this trader is a good scalper, and maybe the trades are very small and on the lower end of the hold time. But let's look at this. And look, here's the correlation. The day winning percent. That just trades today? The percent of winning trades. Oh, today. Okay. One trade. Yeah, let's look at this. So what my fear is something like this, okay, where 2 or 3 bad trades will wipe out a month or 2 months, or it could get scary, right? Where one bad day could wipe up the whole entire account. So your risk reward, and look, Coach T is on it. Your risk reward is 0.27. Try to improve this ratio by setting wider profit targets or tighter stop losses. This makes sense. It's minus $1,000. That's not too bad. But yeah, your extremes is about a 1-to-1. Lots traded, 243, 284. Average trade duration, 4 minutes. Not too bad. I'm curious to see. Let's get into this. Yeah, so that's kind of what I was thinking, right? You're just getting stopped out at $1,000. What account size? Doesn't really show me this. So essentially, yeah, this is one thing that this is what makes me nervous, right? You're just letting it hit the $1,000, which it works, right? If you could keep those days it's just I'm trying to think of how I explain this. Imagine having like 3 or 4 of these losing days in a row, which can happen. You can kind of see it here in your, profit, where if you have back-to-back, moves like this, you could get to zero really quick, and it could be very emotional. But and here's the nice thing. Here's the exception. I don't want to continue to talk bad. The exception is consistency. I like the fact that you've been able to do this for 2 months. 2 months of statistics is not something to just, not talk about. You've been able to keep this up for 2 months. So there is something to that. That's good. That's positive. That means that there is more consistency. If I seen this and the trader was only doing this in like 2 weeks, I'd say, okay, 2 weeks, nah, this trader might not hold up. in terms of dealing with this type of a move. But it looks like, you've done it pretty good. You've suffered this ugly drawdown and you're starting to grind your way back up. So the fact that you've done this for 2 weeks is good. I like that. Or 2 months. That's good. So let's keep going through this. And this is the last one. Yep, the trades are on the small side, on the short side. And this is kind of what I was thinking, is really, really quick trades, really quick to take profits. But then you're letting your losers run. And, are you letting your losers run to the $1,000 mark? Not sure. We'll look at that. But yeah, losers, you're holding on really long, maybe just hoping that it comes back, waiting for it to come back. I can't argue with profit. I'm not going to argue with $5,400 in profit. Overall, it's a net positive expectancy. But yeah, it's just something. It brings PTSD to me because I have similar, right? And then you get 4 or 5 ugly days in a row and you just implode. So just always keep that in the back of your mind. You are in an express funded account, so there is more pressure. It's scalping, high win percentage, low risk reward, really, really quick in and out trades. This volatility, you can see you've been doing really well in this volatility. And yeah, you can see that. Here's the example. There's the example this month. So July is that example that can be scary. Looks like Wednesdays are your worst day of the week, right? Maybe you don't want to trade Wednesday. But yeah, one bad day could wipe, a whole week. Like, this could almost ruin a week. This was still a positive week. This was a positive week. This was still a positive week. You just have that high percentage. This was a very bad week. This was a bad week. So 2 bad days in 1 week can ruin that week. I would be scared, and this is why I say PTSD. 3 bad days in a row is very hard to recover from. It takes a lot to recover from 1 bad day. But once again, can't argue with profit. Yeah, look at this. Lots of green on the board, 200, 200, 200. Looks like you're eligible for a payout. That's great. What I wanted to do is dissect what those losing days look like. Let's see. Yeah, just a whole minis makes sense. 600, 600. Yes, really scalping. What's your trade position? One or 2 lots, not too bad. Lots of volatility lately, so that makes sense. Micros, so I do like the fact that you were trading micros at one point. So I think I'm going to leave it there. I love reviewing the statistics. I could sit here and talk for hours and hours reviewing statistics because they're just so interesting to me. They change. I'm probably never going to see any 2 trader statistics that's going to be the same. But when I see statistics like this, it's positive. I love to see traders making money in an express funded account. Hopefully you've taken a payout. It's just there's a red flag, right? With any statistics, even my own, there's always red flags. There's always, signs to just make sure that you're aware, make sure that we are aware of what our weaknesses are, what could damage the account. And, for this one, great trading, great trader. If you keep up the same thing, great. If you can do this and you continue to do this, that is great. It's just being aware of where your downfall could be. It's just like with anything. Like chess, I love chess, and you're always thinking, if I blow up this account, how would that happen? Like, how can I blow up my account? And I think of the worst case scenario, right? Like we're doing an own stress test almost. Like we're stress testing our own statistics. If let's just say, like, I want to knock on wood. Let's just say, in 2 months from now, you keep your statistics the same. That's amazing. If 2 months from now you say, man, I struggled next month or I struggled next week and I ended up blowing up my account. The way that a trader like this, from my experience, this is my own opinion, blows up their account is because of this. It is because of, a bad week, a string of 3 or 4 bad days of 1,000, 1,000, 1,000. 5 days you're at 0, right? And so what you've done in like 2 months, and you kind of see it. I'm just saying, please always understand the strengths and the weaknesses of how you are trading. This is always my opinion, and this is something that brings me that same, because I do trade similar like this sometimes, depending on how the market is. But that to me would be the weakness, is a string of losers can wipe out a good 2 or 3 weeks worth of profit. And statistically, it works out. Emotionally, it sucks. And I think this is great because in terms of, like I was saying, Jared Tendler is going to be returning on August 14th. And then Brett Stingberger is also going to be returning on August 20th. So I'll be curious to see what they say about traders who, high win percentages, low, like upside down risk rewards. Days like this are very emotional. I could only imagine how emotional it would be to work so hard to make $4,000 in an express funded account only to lose basically 75% of that in 3 days. And so I'm sure, Jared Tendler or Jeff would be able to speak a whole lot better than I can, or not Jeff, Brett. I'm horrible with names. Brett, when they come on. So maybe I'll hop on there and ask them a question. So definitely that. It's the emotional part when I see this, and that's why I say PTSD, is because I've went through something similar where I've had statistics like this, and I've done that. I've blown up the account. I'm like, did I really just spend 2 months grinding and making money, and I just blew it away in 3 days? It's difficult, right? So if you can manage your emotions and stay consistent, statistically, this works out. It shows it. It's great to see. Express funded account. You can get a payout. Put that in your pocket. I love that. Other than that, I think we went through everything. Everyone knows I'm keeping track. We did get that 18,000 here on the NASDAQ. 18,000 on the NASDAQ hit. That worked out, right? So if I would have had a tighter stop or a more loose stop loss, or if I left the runner on a micro, $18,000 hit. I'm going to continue to be looking at the Topstep indicators, the Topstep daily levels, just to see how that plays out. It's only on the minis, right? So it's on NQ. So NQ, there we go. Going to see how that plays out. Looks like we had a daily level here, there. And so, going to be interesting. Love it. It's easy. It's on the chart. Easy to trade. Nope, White House. I still have my live account. I've just been trying to readjust. This market's been hard for me to trade. Like I said, I've been trying to scalp. It's been hard for me to trade. Still have my live account. I'm just taking some time, testing some strategies out. When I don't feel comfortable trading my live, or when I take losses in my live, I have an express funded account that I've been trading on. That being said, don't forget, Deanna, she has her London session at 3:30 a.m. Coach Jay is going to be doing At the Buzzer at 3:15 p.m. after the close. And then Nick Vertick's going to be that amazing, Sunday kickoff at 4:45 p.m. Other than that, I will see you guys tomorrow night. If I don't see you tomorrow night, it will be Friday morning. Coach, I wonder if Coach Jay is going to be Friday morning. I will be on to Fast Markets. Until then, I will see you later.